Hello and welcome. This is going to be a financial analysis of the company Tesla Motors by Presley Lundquist, Vijay Pawar, and Taylor Stevens. To do this analysis, we will be considering the company's history, prospects of business, customer base, effects of the economy, stock performance, income statement, and financial ratios while using comparisons against the industry the company belongs to and other companies in the industry. In addition, we will have our final conclusion at the end of the presentation based on financial analysis discussed, making recommendations of whether to make an investment or take an employment with the company.
Tesla was founded on July 1st, 2003 by a group of engineers. They wanted to prove that electric cars could be better than gas. Tesla is an automaker and a technology and design company with a focus on energy information. Tesla's first car was launched in 2006, officially making it a car company. 4 years later, in June of 2010, Tesla became the first car company to go public since Ford did in 1956. Since 2006, Tesla has released 4 different models of vehicles, including an SUV and most recently a more affordable car. Tesla also produces charging stations for the cars called superchargers, vehicle powertrain components, and battery products.
Pictured to the left is CEO and co-founder Elon Musk. Musk is a well-known entrepreneur, engineer and inventor. He is also the CEO of another company named as SpaceX. He has been very invested in the company from the beginning and is continuously pushing to make the company better. Tesla is a part of the auto industry, the electrical vehicle industry, and serves the energy storage market as well. The company is still relatively young and going through a major growth phase. Tesla markets and sells its car through its own network instead of selling through third party dealership. In most states, they are having to fight the law publicly in order to get it overturned. Currently, the company is working on production of the most recent car, the Model X, and hoping to begin getting them shipped at the end of the year. They are also expanding their supercharger circuit and fighting to win over more states to sell cars directly. They have even gotten the support of the Federal Trade Commission as well.
The United States auto industry has dominated the global market since Henry Ford perfected the assembly line in 1914. The only country that leads the US in the auto industry today is China. The industry is very large and consists of many companies. Some of the top manufacturers are Toyota, Ford, General Motors, and Volkswagen. The industry is very mature but is constantly growing, as you can see in the graph on the left, displaying sales and growth rate of the recent years. This shows us that the growth of the company isn't slowing down anytime soon. In 2015, about 7.7 million passenger cars were sold and 4.25 million were produced in the US.
Tesla was founded less than 15 years ago and is a completely electric car company, which makes the company a newcomer in multiple ways in an industry full of companies that have been around for decades or even a century. Tesla is quickly emerging and has no problem getting its name out there. Just months after the company introduced its first car, the Roadster, in 2006, the car was featured on the cover of the Time magazine and written about as a recipient of the magazine's Best Inventions 2006. Today, the company puts zero money towards marketing and has no advertising. This is not a problem for the company because the orders are so high for the company and have delivery wait times for about a year. The majority of customers for a Tesla car are males between the age of 45 and 64 with a yearly income of over $100,000. These exact percentages are presented in the table to the left, showing data for sales of one model in the Tesla family. However, pre-owned Tesla models are selling to a much younger crowd, and the percentage of people who earn less than $100,000 that purchase these pre-owned cars is 36%. Other potential buyers in the market for an electric vehicle are environmentalists, cutting-edge enthusiasts, and long-term prospective buyers.
Let's see the effect of the economy on Tesla. The auto industry is a large and important one in the United States. The industry and the economy in the US are so closely related that they basically go hand in hand with success and struggle. If the economy starts to struggle, then the auto industry sales and other financial aspects begin to have problems as well. The same goes for if something happened in the auto industry and it couldn't make sales, then the economy could start to have a direct hit by a number of things, starting with a rise in unemployment since the auto industry provides of 1.7 million jobs and 4.5% of all jobs are supported by it. Tesla would be expected to have the same problems if the economy started to struggle. However, the current rapid growth in the company is having a positive effect on the economy because in the past 5 years, the company has gone from employing 1,000 people to employing over 14,000.
This graph shows the stock performance of Tesla Motors over the months of February and March of 2016. On February 1st, the stock was at a close price of $196.94. The low that it dropped in the month of February was on the 10th, when the close was $143.67. By the end of February, the price rose back to $191.93. On March 1st, the price was at $186.35, and it rose over the course of the whole month to end at $229.77. So, over the course of the 2 months, the stock rose about 15%. CEO Elon Musk announced to shareholders and confirmed that Tesla's plans on delivering at least 80,000 vehicles in 2016. This most likely excited investors and encouraged them to start buying more stock, possibly explaining the constant steady rise since the middle of February.
On the left is the Nasdaq Composite Index over the past 3 months. This index typically indicates the performance of the technology industry as well as the investors' attitudes towards more speculative stocks. This trend line is similar to that of the stock performance at Tesla's. Therefore, we can say that this index closely matches with the company's stock performance within it. On the right is a table of stock prices from companies in Tesla's industries. Tesla's stock price is relatively higher than other companies at the moment. Tesla's market cap is about $30.9 billion. This might be lower than other companies, but Tesla is expected to grow and the higher stock price is expected to be worth it in the years to come.
In analyzing the company's balance sheet, we also want to discuss its financial strength. Two ratios to represent this are a debt to equity ratio and a return on equity ratio. A debt to equity ratio is calculated by dividing total debt by total equity. Tesla's ratio was 2.45 at the end of 2015. This number might seem a little unsafe, but since the automotive industry is one that is capital intensive and does a lot of borrowing, it is expected that they have a higher debt to equity ratio. The average ratio for the entire automotive sector in 2015 was 9.2. So Tesla actually has a better ratio in this instance compared to its fellow companies, most likely due to its smaller size. To determine the efficiency of the company, we will look at the return on equity ratio. This ratio is the net income divided by the shareholders' equity. Looking at the graph below, you can clearly see this is where Tesla does not shine today with its current negative 88% compared to the industry average of about 10%. Tesla's large negative ratio is due to its net loss of $889 million and the average shareholder equity of $1 billion during 2015. But this isn't surprising, being that Tesla has not reported profit since it began disclosing financial results and has always had a negative ROE. This is due to the fact that Tesla is still a young company that is going through a huge growth phase and does not have a first priority of profitability. It is difficult to compare Tesla to its peer companies in this area because most automotive manufacturers are very mature in the industry and are mostly reliably profitable, and because not only is it new to the industry, it is a far different type of company considering that it is also part of the energy storage market.
Finally, looking at the income statement, we can analyze ratios about profitability. First, we look at gross margin, which is a company's total sales revenue minus the cost of goods sold, divided by the total sales revenue so that it represents the percentage of each dollar of the revenue that the company actually receives in revenue. Tesla's gross margin in 2015 was 23% compared to the industry's average of 17.43%. The graph below shows the comparison between the two over the past 3 years. The higher percentage obtained by Tesla is most likely a result of the high price of the products they sell. So, although the revenue total for the company might be lower than other companies in the industry, Tesla makes a slightly better profit off each product they sell. Because of Tesla's ongoing negative income each year, gross margin is a good ratio to watch for improvement of production efficiencies and pricing power. Operating margin ratio is also another profitability ratio to consider when analyzing Tesla's financial ratios. This is another ratio that is greatly impacted by the fact that Tesla is a young and growing company. Operating margin ratio is calculated by dividing operating income by net sales. The company's operating margin was once even as low as negative 532%, but it has shown great improvement in the past couple of years, and as of the end of 2015, it was negative 18%. Reasons for the low operating margin are mostly because of the vast amount of research and development. Therefore, the number is predicted to rise in the upcoming years.
The cons include, first, the high demand of product and inability to produce that amount of vehicles quickly that could result in delays, and having customers wait for a long period of time for a product they ordered could be bad for customer satisfaction. Second, the high price of stock due in expectation to not have profitability for the next few years. Third, if the global economy or US economy starts to plunge, it wouldn't be surprising for Tesla to take damage from the pressure on sales. Fourth, Tesla's prices on vehicles are pretty high, which can make the customer base narrow. Also, other car companies in the US are producing electric cars for a lower price, which could draw away any potential customers.
When making a decision about investing in or being employed by Tesla, it is very important to look at the investment pros and cons. The first advantage is Tesla Motor is a company in the growth stage of its life cycle, and although the company hasn't turned a profit from a full year, yet Tesla's demand for vehicles surpasses what Tesla can supply. But CEO Elon Musk recently put out a letter to shareholders disclosing an estimate of 80,000 vehicles to be delivered in 2016, which shows that production is predicted to pick up its pace, and with that, we can expect financial ratios and profit to reflect these sales. Second advantage is Tesla has one of the world's top entrepreneurs and a gifted scientist and the engineer as the CEO. Elon Musk owns 20% of the company, which shows you his confidence in the company and its promise for success. Third advantage is Tesla's plan to expand their supercharger network will help eliminate the range anxiety that often comes with thoughts of purchasing an electric vehicle. The fourth one Tesla has advantage over the competing car companies that are producing electric cars due to not only having a superior but also having the ability to sell vehicles directly to the public instead of through third-party dealership. Also before Tesla came off as a luxury car company with its high-priced vehicles, but with the new more affordable Model 3, Tesla should be able to compete with electrical cars produced by less expensive companies. Fifth one, Tesla only product is not just vehicles. The company also builds electric powertrain components for other automakers, produces battery product, and is expanding their supercharger network. With these other projects, the company has entered the energy storage business, and these businesses might be relatively small, but over a long period of time, they could help keep up the growth rate. The sixth, the current urge from the world leaders for climate change and less fuel consumption could push for more purchases and investment in electrical vehicles.
Along with weighing in the positives and negatives of investment, taking a look at updates about expansion or future endeavors is also important. As mentioned before, Tesla sent out a letter containing plans for a fast delivery growth for the next year, a new, more affordable model becoming available for the order this year, and is expecting the supercharger circuit. Therefore, future prospects look good for the company in the upcoming years. Finally, taking in all previous factors into account, even though there are some risks, these aspects of growth coming soon with the company push us to recommend investing in Tesla Motors or accepting employment within the company. The massive amount of potential and promise for the company's growth and success overshadow the risk. After all, buying stock is more than just buying stake in a company. It's about showing your confidence and belief in the future success of the company. Thank you for your time.